Hi, this is Aaron Engelman from Two Teachers Tax Service in Lyman, South Carolina. Today, we're going to talk about progressive tax rates and tax brackets. On the right, you'll see the 2025 tax bracket for single filers. The U.S. federal income tax system is progressive and uses tax brackets. Our progressive tax system increases tax rates as income increases. Tax brackets are income layers, each taxed at a specific rate. Moving into a higher bracket only increases tax on income within that bracket. So let's look at this particular bracket here. If you're a single filer in 2025, you pay a tax rate of 10% on taxable income between 0 and $11,925. Once you've made $11,925 from $11,926 to $48,475, you pay a tax rate of 12%. And then on income between $48,476 and $103,350, you pay 22%. So the lowest income is taxed at 10%, the middle income is taxed at 12%, and then the highest income in this instance is taxed at 22%. Let's talk about the difference between marginal versus effective tax rates. Your marginal tax rate is the tax rate on your highest dollar of income, corresponding to the highest tax bracket your income reaches. Your effective tax rate is the total percentage of your income that you actually pay in taxes. So the formula is your total tax paid divided by your total income. So in this example, a single filer with $90,000 in 2025 is in the 22% marginal bracket, but has a lower effective rate. And this is because they pay at each income layer. Let's look at the next slide. So the calculation of the effective tax rate for the single filer with $90,000 of income. So in the 10% bracket, they are income of 0 to $11,925. The calculation is 10% of $11,925 for a tax owed of $1,192.50. In the 12% bracket, they pay tax on income between $11,926 and $48,475. The difference between those two numbers is $36,549, which is taxed at the 12% rate for total tax owed of $4,385.88 in that 12% layer. For the 22% rate, this filer is taxed on any income between $48,476 and $103,350. And so we're talking about, now remember it's $90,000 income, $41,526 of income taxed at the 22% rate, and the tax owed there would be $9,135.72. The total income is $90,000. The total tax owed is the sum of the 10% rate, the 12% rate, and the 22% rate. So the total tax owed is $14,714.10. The marginal tax rate for this taxpayer in this example is 22%. The effective tax rate is $14,714 divided by $90,000, which equals 16%. What affects your taxable income? Well, first of all, your adjusted gross income is your gross income minus any adjustments. Your taxable income is your adjusted gross income minus either the standard deduction or itemized deductions. And your filing status determines your bracket thresholds. If you are single, you have the narrowest brackets. If you are married filing jointly, you have the widest brackets, and head of household is in between the single and the married filing jointly. The U.S. tax system is progressive, meaning tax rates increase as income increases. Tax brackets apply different rates to different portions of income, not the entire income. Marginal and effective tax rates serve different purposes and help taxpayers understand their true tax burden. Understanding these concepts empowers you to make informed financial and tax decisions. Be sure to contact us at 269-449-8277 or by email at twoteacherstax@gmail.com. Thank you.